What's up, tycoons? Welcome back to the channel. If you're new, make sure to subscribe, turn the notification bell on so you don't miss out on any of the future episodes. Also, if you enjoyed this video and the other videos I've made, give us a thumbs up and leave some comments and let us know how you feel about the videos. All right. So today's video is on stock market research. And in terms of the individual stock we're going to be looking at, we are looking at Apple. Okay. So this is Apple Inc. And at the time of this recording in 2024, Apple stock is at the price of $219. Okay. And I know some of you might be looking at my uniform and making fun of my Manchester United jersey. But at the end of the day, we are still the best club in the world. Maybe not today, but you know what I'm saying? We're work in progress. So I had to, show some love and rep for the best club ever to exist on the face of the planet of the earth. Anyway, let's get back to Apple, right? So why did I pick Apple to do this episode stock research on? The first reason was, first of all, was requested by Lena. Shout out to Lena and all the subscribers that have been watching my content ever since we kind of kicked some things off. This is fire, right? And I always encourage feedback. And if there's a specific stock anybody that's watching this video want me to kind of look into and dive into, like I'm doing with Apple today, feel free to let me know in the comments. And then, so that's the first reason. Lena was like, hey, look, can you do a stock market research and analysis on Apple, please? I said, no problem, Lena. I got you. So shout out to Lena and everybody that's been really supportive and watching our content and learning as well, right? That's important because watching is one thing, but learning is another. So that's for the first thing. And then the second thing is right now is a great time in the market, right? And like with us going into another age of innovation, AI, it's good to cover some of the notable companies that we haven't revisited in a long time, right? And these are companies that everybody knows and quite familiar with. So it's always nice to kind of, be able to provide some insight on that a little bit. Okay, so that's two. And the third reason is Apple is a company that, at present times, it's easy to kind of overlook, right? You just kind of don't really think about them much. It's almost like they're like in the background. You're more focused on like your NVIDIAs, your hot stories, things in the market, things in the news and such. And you don't tend to hear that much about Apple. So it's easy to overlook that company, by the same, in the same, breath, it's also easy to overvalue and assume that it has basically no challenges, right? Because we're so used to Apple just killing it over year, decade over decade. And so we can easily assume that Apple don't really have any challenges or, anything that they have to worry about. And so hopefully this research video can help you at least look at their potential for growth and also question your own perspective on the company and also question the company itself, right? Like any investor, it is healthy to challenge your beliefs, especially if you are picking individual stocks. That is extremely important. If you're going to pick individual stocks, you have to constantly, challenge your own thought, perspectives, and beliefs, right? So that is really the third reasons why we're covering Apple. And then fourth reason is also it's good to see how Apple has remained competitive, right? Especially over the decades with a lot of competition and challenges, which we'll look at in a second. And then right now, the hottest topic is really this AI race. Okay. And so where does Apple sit and fit in making sure that they're competing in this AI race? Okay. So that's one of the main reasons why these are really the four main reasons why we're covering Apple today. And so again, just a disclaimer, this is not a stock market advice for you to run and go and buy Apple. It's just to help teach and educate others about all the companies and some of the companies that are around and some of the things you want to look at, fundamentally on a simple level, high level, when it comes to picking individual stocks. I always speak and recommend that you do additional research along with what you see here in the videos that I do cover. Okay. Now, before we continue, two things to point out is that all the financial information covered in this presentation here are in the billions. Okay. Apple is not no small company. It is a massive company. Okay. So all the numbers and things we're going to cover is really in the billions. So I want to make that clear. And then also for Apple specifically, the year, right? The fiscal year is from September to September, right? Year over year is from September to September. It's not your typical year in terms of like, okay, January to end of December. No, it kind of falls in a different cycle, which is September one year to the next year, September. Okay, cool. So yeah, let's dive into it. Let's begin. And actually, before we even cover the agenda, there's one last thing I want to touch on Apple. Apple is really um, the second company on the planet by market cap, right? Which is Apple's currently valued at $3.3 trillion right now. This is insane. As of now, there are only three companies on the planet that are valued at least $3 trillion. And the first one is Microsoft, which is valued at 3.4 trillion. And then you have Apple at 3.3. And then in third place, you have NVIDIA at 3 trillion. So crazy when you think about it, right? So let's dive into it a little bit. Let's look at our agenda. And so from an agenda perspective, kind of a similar theme that we always go with, right? We start off with just a company overview, some of the background and some of the business model, how they actually operate and make money. We might all know the company, but many of us may not really understand the company's background, history, what they do, and just the capacity, right? All the various things that they really do. We might know Apple as, hey, I have an iPhone, great. I have AirPods, great, right? But many of us may not know the actual business model per se. So I like to always cover that first. And then some of us may not know the company at all. That's a possibility, And then we'll move on to fundamental analysis, which will cover some of his financials, his competitive nature, and some of the competitive analysis associated with that, right? Some of my own financial rating that I give the company based on the research I did for this video. And then we'll move on to some of the technical analysis, and that's heavily focused on the stock performance, both versus competition and versus benchmark, right? And then I also give it my own final technical rating along with my overall rating. You're going to find that Apple is one of those Apple's interesting because there's a lot of things that may seem contradictory about this company and the research, and you're going to understand a little bit more about that as we continue and dive into it, okay? So okay, there we go. All right, so what is the background of this company? How did this, company really came about? Let me move this up here. Perfect. So Apple was really founded in 1976 by, I believe it was three founders, right? So we have Steve Jobs, Steve Wozniak, and Ronald Wayne, right? Currently, Steve Jobs have passed away, and now they have a different CEO. But this is how Apple really started, and they kicked off with personal computer, and then eventually evolved into a multinational technology firm and to what we see today, which essentially encompasses a bunch of various products, services, and stuff like that, which we will look at their products as well. But the first flagship, I would say the flagship product that really kind of put Apple on the map, for lack of a better word, is really the Macintosh, right? And then followed by iPod, iPhone, iPad. And since then, they've constantly driven innovation, especially for consumer electronics. And then under their current CEO, which is Tim Cook, they've expanded their portfolio, and revenue streams into all different areas, and they are literally in competition with everybody, right? So we see Apple Music, iCloud, Apple TV. They got services, they got marketing, they got the iOS softwares, they got hardware, design, experience, privacy, right? So they've constantly push that innovation envelope in a very nice, succinct, and palatable way for the average consumer to feel affluent, to feel like they're doing well, to have an incredible experience with the Apple ecosystem and with the Apple products, right? It's a massive global company, and they do a good job of kind of emphasizing and showing how they're using sustainability and technology to kind of help stay green as best as they can, right? And using the materials that don't create a lot of damage, that does not have negative impact on the planet and on our ecosystem in terms of a planet, right? So it's pretty exciting to see. So that's a little bit about the company background. We're going to dive a little deeper into basically the business model and revenue streams. So if we look at, let me move this up here again. If we look at Apple's business model, right, how does Apple make money? And Apple really has 6 main segments or revenue streams, if you will, right, income streams. And so they're really multifaceted. They are at war and in competition with everybody, right? So they got hardware, software, service, like I mentioned earlier, right? And they leverage all of these components in everything that they do to drive sales, create that customer loyalty, and like that, that the Apple brand, right? And it helps regenerate a lot of income and recurring revenue through their products and service offerings. So there's really 6 main areas. And so we're going to dive into those 6. And the first is hardware sales, right? That is how the company was born. It came out through hardware sales. And so, like I said earlier, the Macintosh was really their flagship to kick off or put them on the map. But since then, they've evolved. And so now we have the iPhone, right? Now, iPhone is really the flagship product for the company. And it actually contributes to about 50%. Okay, it contributes to about 50% of Apple sales, right? And then followed by that is the Mac, which is a line of personal computers. That's the MacBook laptops, right? That have desktop computers as well. And then iPads, which range from a bunch of different sizes, different features, different storage space and abilities and stuff like that. And then also Apple Watch, which has actually taken over the scene over the last 10 years quite a bit. And is really a smartwatch offering. Gives you a lot of health and fitness tracking abilities, amongst other features, right? You can make calls, you can text, you can check emails, you can do all those things. And that's really beneficial for people that are doing work that they need to actually use both their hands to do their 9 to 5 or, you know, their work, right? Because you can speak to it, you can kind of glance at something as opposed to having to grab your entire phone. So it's a lot of value proposition when it comes to Apple's hardware products and so forth, right? All right, and then in terms of software, we see basically how Apple develops its own operating system, right? The iOS, which is, I know many of us have iPhones, so sometimes we see, we get these updates or they're adding these features, they're tweaking this, and so that's really a huge engine for the Apple ecosystem because they have their own iOS, they have for iPhones, they have Mac OS for computers, Watch OS for their Apple Watch, and TV OS for Apple TV, right? And so they're constantly making upgrades, tweaks, changes to provide value to the consumer in a more feasible, easy way and just an enjoyable experience, okay? Also, they have a lot of applications, okay? They don't just have an app store, you know what I mean? They have applications that they actually create and build out themselves. So the Final Cut Pro, Logic Pro, and a bunch of products. So you got Pages, Numbers, right? So Numbers is really like their, lack of a better word, like their Excel version on their phone, right? And then they got Keynote, which helps with a bunch of other things there. One of those, some of the features and apps that I use is really like the Reminder app. I use that quite religiously when something pops in my head I need to do, whether for the business or for other things or personal life and family oriented stuff. I put that in there. You know, and it will serve me, it will remind me when I need to kind of act on it. And then, so that's the first 2, right? Hardware, software, followed by services. And this area has become a big moneymaker for Apple. And they're smart because they figured out a way to diversify from just depending on their hardware and software. They're like, hey, we can give the hardware, we can give software, but guess what? We can provide services which helps create recurring revenue, right? Excuse me. Sheesh. Right? Because if you buy an iPhone today or an iPad today, you're not buying an iPhone or another iPad probably for at least a year to 3 years. But if they can provide certain services through the App Store, through Apple Music, iCloud, Apple TV Plus, Apple Arcade, is a subscription model and a streaming model where you actually have to make payments consistently every single month. And that's a huge recurring revenue, especially in the streaming game, streaming of games, streaming of movies. Subscription models is really one of the best ways for these companies to kind of, diversify their income stream. So in services, we have the App Store. App Store is incredible, right? All the apps that you want for whatever needs and features you're looking for, you can find that in the App Store. The craziest thing is Apple charges developers and other companies to be on their app store, to create products that they can put on their app store, right? So whatever money that these app creators and these other companies, and for example, if Google or Meta, they pay Apple literally money all the time so they can stay on Apple's ecosystem, Apple store, and stay on the device. Right, so that's a really neat way of making a lot of money through commission-based models. So sometimes they charge 20 to 30%, 35%, and they're actually doing really nothing, right? They just get that money all the time. So Apple Music is another subscription-based model, which is really a rival, and that basically competes against all the other music streaming platform, right? So you got Spotify, we have Pandora. I don't know what's another. I think Spotify, Pandora, and Tidal. All right, that's what Jay-Z's vibe. Yeah, Jay-Z's a streaming platform, and I'm pretty sure there's a bunch of others. YouTube as well. You might as well include YouTube in that ball game. And so Apple Music has also gotten a piece of that pie and that market share. Then you have your iCloud. This is about storage, computing services for backups, right? When you want to save stuff, back some things up in case there's damage to your phone or something happens, you still have access to retrieve all your files, sensitive data, whether it's pictures, memories, right, videos, experiences that you don't want to lose. You can pay for more storage, and it can be stored, and your data is safe, and you can share it if you need to, right? Apple TV Plus, they saw how Netflix was cooking the game. They said, we need a piece of that pie. So Apple came in hot. I don't know anybody who really has Apple TV Plus, and I don't know anybody that talk about the shows and videos like Apple original stuff that's on there. But I would suspect that it's actually pretty good or decent. Again, it's another subscription-based streaming service model, and so they can have shows out and movies, and just kind of take advantage of that streaming entertainment environment, right? And keep in mind, everything that we're covering in terms of your business model and revenue stream is underpinned by data. All right, underpinned by data. And you're going to realize how powerful Apple really is, because we're looking at products and goods and services and software, but data, the amount of data they have is shocking. And I'll touch on that in a second. But let's continue. Integration and ecosystem. They have, in my opinion, aside from Microsoft has the best ecosystem for enterprises, businesses, and the professional settings, right? Stuff like that. Apple has the best integration and ecosystem for consumers, for like your everyday consumers, right? Your everyday public people, consumers. Apple has the best seamless, and from hardware, software, the services, a cohesive user experience across all the devices and stuff. It's crazy. And we like that. As consumers, we like that. That is why we're so loyal, and we are repeat purchasers of Apple products and services. Even if we're broke, or even if we shouldn't do it, even if we can't afford it, we're still going to do it, because at this point, it is hardwired in our DNA and our brain cells, because we grew up on it. We've seen the benefit of it, and we know that they are really the best of the best when it comes to what they do and provide the public in this area, right? So the ecosystem is fire. The fifth way to make money is retail/distribution. They have a huge global network of retail stores. We know that China is a big hub for them in terms of manufacturing, distribution. And recently, India has also become a huge opportunity and space that they're trying to maximize and take advantage of. Right? And you got to think about it. It's smart, because both India and China has at least 1 billion people in their country, in their nation, right? And India is the fastest growing nation in the world. And when it comes to meeting the demand of the world for Apple products, services, goods, softwares, you need a large workforce to produce these things in an efficient manner without it costing too much to make, right? Because that's how you're going to get your profit. So when let's say you make the iPhone for $50, this is just an example. Make the iPhone for $50, you sell it $1,000, right? And then once you kind of put in all the expenses and everything, you might come out to $100 in like $100 to $200 in real expenses, but the profit margin, your profit that you make, is $800, right? And so that is a massive business model that Apple has, and they're doing a really good job at that, And so you have retail stores everywhere, manufacturing, distribution, premium shopping experience, direct to consumer support, right? They have a Genius bar, which is really cool. And then online sales are massive for the company as well. They work through their website and apps, all adds a lot of money to their revenue. Then lastly, brand and marketing. You mentioned how I said that many of us will still go and buy it and do it, even though we can't afford it. That's a huge testament to their brand and marketing, along with the user experience that we've all had with their products, right? So they spend a lot of money and resources on marketing, maintaining his brand, right? His image, the quality, and the premium status. Even then when you buy an Apple product, the way it's packaged, right? The box you get it in, how to actually open it, how to activate it, how to wake it up. Like is a really nice, like above average experience as opposed to just buying something and you're like, okay, here, that's it, right? Is the feel of it is completely different. So they're known for effective product launches and advertising campaigns. Okay. And I think there's something to definitely touch upon here in terms of his business model. You're probably wondering like, okay, where does AI fit in all of this? And like the amazing thing Apple has been able to do and implementing first of all, they've been implementing AI for decades, right? And so it's not new. It just became more mainstream to everybody else. I mean, you look at Siri, right? Hey Siri, Siri's been around for many, many years. And when you look at AI and how they've leveraged it, it's already been impacting all the 6 major income streams that I just outlined in the last slide and this slide right here. Okay. The craziest thing, though, I think, in my opinion, the best play with AI for Apple is really in like 4 segment areas that I think they can maximize and exploit, right? It's probably more than 4, but I'm just going to touch on 4. The first one is their privacy and security. Apple is well known for data privacy and security, right? They have one of the most tight-knit system, and that builds trust. That's why as consumers like Apple, because we know that our security, our data is private, is safe, it is not shared with everybody and so forth. So their privacy and security is amazing. And leveraging AI to even make that stronger is a huge opportunity for Apple, right? And then the second thing is really the consumer value proposition by way of like bringing high quality value, like usage, the use cases for the average consumer in a way that it actually makes their life experience, responsibilities, and how they interact with Apple products meaningful. You know, a lot of times we hear AI and we're thinking like software engineers or everybody that's working in tech, like extremely smart people. But Apple's biggest strength is the consumer population, right? They know how to make all these quote unquote complex brand, like things that look so complex or branded in a way that is almost like, what does the average person get from this? How can the average person use or understand this? They figured out a way to simplify it all for the average user. Literally, they are the best at that. So they provide a lot of products and make it meaningful for the average consumer. And also, I think if they're able to also take away some of the mundane tasks, right, or provide like great suggestions on how to use the Apple products through AI, right? For example, how to really maximize all your iPhone features, right? Capabilities that really serve like you and I, we are the users, right? In terms of like how to, for example, if we want to do something or we're looking at something, or let's say we're on Amazon and then the AI can tell us, hey, I've seen you've been looking at these products. These are other websites or other companies that have the same or similar products, and these are the price ranges and price points, right? Maybe on Amazon, the same exact thing is $50, but because of the research that the AI did in the background, it found the same product for say $30. Now, knowing me, I'm gonna buy the $30 product for the same quality of product than buy $50 just because it's Amazon, right? So that's just one little example on how it can provide the average user some great value and stuff like that. Okay. The third thing there is really the massive 2.3 billion active users data that Apple has. Okay. Remember I mentioned data underpins all of it. So Apple literally has like 27% of the 25 to 27% of the world population using their product, devices, and so forth. 2.3 billion. That's a lot of information, a lot of data, and they can maximize that, leverage that to make even way more money through AI, right? And then the fourth is really the App Store and developers' ability to create apps of various models to benefit consumers and the Apple product users, right? And so already we see like, okay, as they launch these AI things, before it even hit the consumer, right, they give developers early access to develop and start using these tools to build and create the next generation of apps and services and products within that ecosystem. So I think those are some of the ways that Apple can really benefit greatly when it comes to this AI push. And we see them doing that, right? We saw Apple Intelligence. If you haven't, make sure you go look it up. They spoke about how they're doing all of these things. All right, next slide, we have the actual products. Now, most of these are familiar to many of us, all right? Some may not be, but I think this is incredible when you look at what Apple has accomplished in their history up until now, right? And chances are it's probably going to continue, right? And we got we got Apple Watches, all the different types of Apple Watches. We got their latest headphones here. We got AirPods. We got iPads. We got desktop. What else we have? We have laptops. We have the Macs, right? What else is in here that I'm not really seeing or catching? The speakers. Yeah, they got speakers. They got all types of different things, right? And so in terms from a product perspective, Apple has 1.46 billion active iPhone users worldwide, right? So iPhone is a massive moneymaker for the company, right? Now, from a market share of like the phone market share perspective, that 1.46 billion active users, that makes up about 21% of the entire phone market, right? Which is crazy because 50% of Apple's revenue comes from their iPhone sales. So iPhones are very, very important to this company because half of the money they make, half of their income is derived from their iPhones. Hence why they always upgrading their iPhones, bringing new ones out, right? Tweaking the features, changing the design, changing the layout, changing the user experience. They have to constantly innovate and provide new and additional qualities that might be in demand based on the data and the information they have from consumers. Okay, again, 2.3 billion active Apple devices users worldwide that I mentioned earlier, which is roughly about 27% of the world population. So they have a lot of data on people. And I think on here, I currently own many of us, own Apple products. So personally, I think I own 2 iPads and 2 iPhones, and that's mainly because of my business. Other than that, I probably would have only 1 Apple product, and that would have just been an iPhone, and that's kind of it, right? So when it comes to headphones, I'll go and buy a $20 to $50 headphone. I don't really care. In terms of watches, I'm more of a classic guy, so I like your actual watches that are just watches. I don't need it's essentially a second phone on my wrist. But by the same token, it doesn't mean that it doesn't have value. It just don't have value to me. I'd rather just own the stock and have my iPhone only and just be chilling. But because of the business, I need certain tools. I need certain things to help me out. And then, in terms of phone bill, I put that on my business because I use the phone to conduct a lot of business, especially on social media. And just kind of, day-to-day operations. I do most of that on the phone. So that's why I have about 4 Apple devices. But think about it. This is something I want you to think about, okay? How many Apple products do you have or have you owned over the last 10 to 20 years? Think about that, right? I mean, we're talking about from the iPod, from the iPod Nano, the iTouch, first iPhone, right? Then now we're on iPhone 15, right? We've had literally 15 iPhones, and at times we had Pro, Plus, Mini, just a bunch of different variations of just the iPhone generations over time. That is just the iPhone. Think about the AirPods, same thing. They've had about 3 to 4, maybe 5 generations of AirPods. Now they got headphones. They just got Vision Pro, right, which they unveiled that earlier, which we all are aware of it now. And then in terms of Apple Watches, same thing. They've had 4 or 5 generations, and some of them are designed for outdoors. Some of them are designed for different stuff, everyday use. So over the last 10 to 20 years, people upgrade their phone over time, right? They buy more products. So picture how much money Apple gets and make from even just one person over the next 10 to 20 years alone. Just on one product, right? Let's say just the iPhone. Over the next 10 to 20 years, chances are many of us will probably end up owning about 6 to 7 iPhones in that 10-year gap, and in some cases 10 in that 20-year gap, right? That's one product, and most people own probably 3 to 6 Apple products easily. So think about how much money that you and I and everybody, right, almost that 3 billion people are making for Apple on a consistent basis for the long term. Okay, so now that you've thought about how much money you done made for Apple, think about how much money has Apple made for you. Again, this is not a stock advice to go and buy Apple, but it's a really informative way to actually think about some things, okay? How much money has Apple made for you? If you've made Apple 10, 20, 30K and Apple has made you no money, you might need to rethink some of your strategy in terms of consuming a little bit, right? I'm not saying consuming is bad. You gotta buy to live, so that's fine. But also make sure that you're investing and buying assets. So when you spend money, you get some money back and you're able to build wealth. If you have all the iPhones and all the products, but you haven't built any wealth, that's a red flag, in my opinion. You know, that's not to be judgmental, because we all been there, we all done it, and we all do it in different areas of life and different areas of experiences. But if you want to do well financially, you want to build wealth, you want to obtain financial freedom and independence, you're going to have to make decisions that are aligned with those goals. And unfortunately, as difficult as it is, and maybe hard to hear, get into some of your dreams, and some of these financial goals require you to think about the long term and delay some gratification. There's just no way around it. Okay. All right. Let's move on from products. Let's move on and talk about competition. Boom. Okay. So Apple, like I said, is at war with everybody, right? And in terms of competition, these are just a few examples of the companies that, you know, Apple is really competing against. And so I know we just covered the business model, and we just covered the business model, and it's not coming to me now. I literally just went from that slide. Oh, and their products, right? The business model, their products, their income streams. So it's not surprising to see that they are compete against hardware companies, software companies, marketing companies, retail companies. Okay. So Apple has a lot more competitors than this, but this is just some of the main ones. And for this research piece, what I focused on is really 4 companies out of this, out of all of this list here, and compare that to Apple, right? And so the 4 companies I really focused on were Microsoft, Amazon, IBM, and Google, I believe, right? And so, and the reason why I selected those, because I wanted to get a good cover of the various segments and industries that they're competing, right? So I picked Microsoft, Amazon, Google, and IBM, like I said, because I wanted to make sure I touch on the hardware, the software, the marketing, their digital footprint, also touch on the streaming ability, right? The subscription and services, and then I wanted to kind of get a good, well-rounded coverage on that. And so, Apple's competing against HP, Dell, Intel, Samsung, IBM, Amazon, Meta, Microsoft, Google, Oracle, Bose, right? Bose and Beats, Sony as well, right? That's headphones. It's part of their ecosystem as well. And then Android. So, that's some of the competition that Apple is going against. And now let's begin and dive into Apple's financials. And I always like to start off with the income statement, because a company that does not make money or don't know how to grow more revenue is not really, I would say it's not advantageous for me as an investor, right? Because why would I be spending so much time and energy looking at a company that don't make money or that can't generate income? That's a problem, right? So let's start with their income statement. And the first thing we really look at is their revenue, right? I always tend to look at it from a long-term perspective. So I like to go back 10 years and look at the 10-year track record year over year. Now, if I'm reviewing a company that just went public, let's say less than a year, then I have to look at their quarterly financial information, right? But Apple's been around for a long time, so we have a good amount of information and data, and that's what you see represented in this bar graph, this bar chart over here. So Apple's revenue has clearly been on the right path since 2014, and this is something I like to see. I'm here for it. This is my vibe and energy. And so from a quarter, let's start with the 2021, right? So I like to look at a few years as well and kind of give you guys some financial data points and some percentages so you see how it's actually faring over the last, say, 4 to 5 years. So in 2021, their revenue was $365.8 billion, right? And that's 33% increase from what it was in 2020. And then in 2022, it went up by almost 8% to $394 billion. And then in 2023, it declined a little bit, right? It was more of a flattish type of year to $383.2 billion. Now that 2023 2% and change decline is not shocking, because 2023 was a difficult year for a lot of consumers, right? Interest rates are rising, right? Inflation is up. The job market starts to get shaky and very difficult, right? And so people are tightening their belt. They're not spending as much frivolously as they would in the past. And so Apple products and services to some degree are not quote unquote necessities, right? They do enhance quality of life, but they're not in need. If you needed a phone, you can get a phone for less than the iPhone price, right? You need headphones, you can get headphones for less than the iPod. No, what is it? Yeah, what's Apple Pods, AirPods. You know what I mean? And so 2023 was not a year where most consumers are spending at a time where they have to focus on necessities. They're not going to be thinking too much about, say, upgrading their iPhones and getting more Apple products, right? Getting some of these other quote unquote, which I would consider luxury products and items, right? And so that makes sense. But even in a difficult year like that, they still generated $383 billion in 2023, right? And so the 12 months ending March 31st, 2024, they were at $381.6 billion, which is really almost a percent of decline there. And then if we're looking at Q1 of 2024, their revenue at that point was $90.75 billion, right? So that's also still slightly declined compared to what has been in the past there. So, but the good news is overall we can see that, hey, Apple revenue has gone up quite healthy, right? From less than 200 billion, and now they're basically close and will be touching 400 billion probably in the near future. So I give their revenue a green flag, because that's a very true and attractive. Typically, when you get to see a revenue of consistency like that, generally you will see the gross profit kind of align with that a little bit, right? And so from a gross profit perspective, we can see that, right, 2021, it went up 45% to which is 152.8 billion. And then at 0.836 billion. So $152.836 billion, right? But I just shortened it just so it's easier to digest for everyone. And then in 2022, it increased to 170.782 billion. And in 2023, it declined a little bit, but it makes sense for that 2023 decline, right? Because they were already kind of flattish here in terms of it declined slightly in terms of revenue. So to kind of remain a little flattish here is expected, right? Similarly here, we can kind of see the 12 months ended in March 31, 2024. It was 173.966 billion. So basically we can round it up to 174 billion. And that's actually a nice increase compared to this 2023 mark here. But that's because we're looking at March 31st, 2024, right? In terms of Q1 of 2024, it was 42.271 billion. And that's a slight increase, almost a 1% increase. So that's actually pretty good, right? Typically, so similarly, we see like a similar pattern or path in terms of how it's grown. Of course, the numbers themselves are different, but the track is very, very much in line. And so so from an income statement perspective, revenue generation, how the company's making money, they are making good money given all of the economic factors, external challenges that they can't control. So from what they can control in terms of how to generate money and the most money, in my opinion, they're doing that and executing that very well. Let's move on to another area of that income statement, which I like to look at, and that's their operating income. The operating income for, let's say, from 2014 to about 2020 was somewhat not as robust, right? Because I think from the way I looked at it, based on the research I did, during those time frames, they were making a lot of interesting bets in trying to innovate in certain areas, right? And so not everything might have panned out well, because the CapEx was being put towards certain things. But Another thing I liked about Apple was during that gap, that time frame, they also had so much cash. And we'll look at the balance sheet in a second. But it had insane amount of cash. They were nearly at $200 billion in cash. And so that was really smart because with that type of cash position, you have a lot of opportunities to change and move and innovate and do different things. And even when things get difficult, you have cash, so you have the bread, so you're not too worried about a lot, right? So it was kind of nice to see the operating income begin to kind of take on a better financials from 2021, 2022 to 2023, and then we'll see what it looks like at the end of 2024. But it's also not shocking that operating income is better in the last 3 to 4 years because given the pandemic, given the situation, everybody was literally dependent on their operations and their phones, right? Not just their phones, but all their products and the ecosystem. So we've seen a lot of increases and some slight declines over time, but overall, the increases have been significant enough to kind of really make the declines look like nothing. And we can see that in the operating income and net income. Net income is extremely important because that is when the company has, they got their revenue or their income, and then they've paid all the expenses, everything, taxes, right? And all the expenses that had to come out of that revenue is already out. And what is remaining is net income. Essentially the money that hits your bank account after when you get paid, right? So that's net income. That's what the company keeps from their revenue and those operations, right? And this is really attractive because we've seen the net income, despite some of the challenges they've had to navigate, we've seen the net income for the most part steadily increase and basically double since 2021 all the way till now, right? And that is impressive because they went from, right, in 2021, the net income went up 64%. And you will see somewhat of a similar theme for a lot of the tech giants in terms of the pandemic because they were raking in and making so much money. It was ridiculous. And the demand was out the roof, right? Because they were the only ones that can provide certain services and allow the world to spend when it comes to some areas of the economy. So that's fine. 2022, it went up almost 10% to 119.437 billion, right? 2023, slight decline. Again, 2023, which is also not too surprising based on what we just spoke about in the previous slide. And then quarter end March 31st, right? Q1 of 2024. They are at basically 28. Yeah, we can round that up to 28 billion in terms of net income. And that's very attractive. Think about it. 28 billion. That used to almost be what they earned in net income almost the whole year of 2014. Now they're doing that in one quarter. So very, very impressive company here. And it's a lot of money. Like I was saying earlier, we can easily forget how powerful and the potential that this company has because we're so used to seeing them perform at a high level and be just so successful that I'm mentioning these numbers in billions and it doesn't even feel or sound like billions. It feels like normal, right? So from a financial income statement perspective, this company is doing incredible things. And so I give them green flags across the board when it comes to their income statement. They know how to make money. That's not a problem, right? I remember I mentioned about the cash positions earlier. This is what I was talking about quite a bit because you can see the cash position has gone down compared to what it used to be, especially around 2019 and 2020. But it makes sense, right? Because they have to innovate, they have to invest, they have to compete. And so in doing that, you're going to have to spend money, right? That's capital expenditure. And so when we look at 2020, how they performed in 2021 in terms of the cash position went down by 31%, right? And so they were left with basically $62.639 billion. Right, that's $62,639 million. Okay, and then in 2022 it declined again. Why? Because they're deploying more cash. Right, so when you see it go down, it doesn't mean they lost the money. It means they basically use the money to conduct business activities, right? Financing activities, maybe operational activities. Who knows? All types of different things that they use some of that money for. Right, so it declined a bit in 2022. But in 2023, it increased by 27%, right? So it went from 48 billion back to 48.3 billion and back up to 61.5 billion. which is crazy, right? And quarter ending March 31st, Q1 of 2024, they are at 67.15 billion, which is a 20% increase from 2023 that we see here, right, in terms of cash position. So it's nice and attractive to see the cash position. Like, first of all, you don't want a company that just has cash and can't find gainful employment for it, meaning they can't find investing opportunities, they can't find innovative opportunities, or they can't turn that cash into more profit, more growth, more revenue, or more investments so they can get return on that investment. That is why when you have your money just sitting in your bank account, it's a bad idea. Even if you have a lot of money, you need to have your money invested, right? Because it needs to generate something. It needs to go to work. You need to find gainful employment for it, because everybody else that wants to build and succeed is doing it. And so is Apple's competition and all these other businesses. They're finding investment opportunities and gainful employment for their money, right? And so it's good to see that Apple deploy some of that money to go to work. And so it came down, but it's also nice to see that they're keeping more eye on their cash position and reserving a little bit more, especially in an environment where unemployment is going up. Interest rates are high, inflation is high, and granted, inflation is coming down. Unemployment has still gone up a little bit, but we also in an election year. There's a lot of uncertainties. There's AI race going on. A lot of things happening where you can't just predict everything, right? And so it's good to be a little bit cautious, but stay aggressive at the same time. And for that, from a balance sheet perspective and cash on hand, I give Apple a green flag. I like what they're doing. Yeah. Now, this is where it gets a little bit interesting because, again, like I said, some parts of this will get a little bit contradictory because Apple is not a company that you can just be like, oh yeah, everything's just cool. They're doing fine. They're doing well. They're making money. They're handling the money that's coming in well. But from a balance sheet perspective, Apple is also a company that leverages a lot of debt. Okay, they leverage and utilize a ton of debt, and in doing that, they can comfortably afford to do that. But typically, my investment style, my strategy is I tend to like companies that don't utilize or leverage as much debt. But let's dive into their assets and liabilities a little bit. When we look at their current assets, right, we've seen that, yes, over the years, current asset has grown. We like that as investors. Current assets are any short-term assets, meaning in less than a year, right? So whenever you hear current assets or current liabilities, we're talking about resources and securities that can be utilized or converted in less than a year. Okay, so from 2014 up to 2023, we've seen that going up. Beautiful, love it, chef's kiss. So that gets a green flag in terms of current assets. Now, where is a little bit troubling for me is the total current liabilities. Right, we've seen liabilities basically going up about the same. You know, it's basically right. Like as of the end of 2023, the current liabilities and current assets are basically around the same, right? 140. It's pretty much neck and neck, and so that is something I'm not excited about, because I typically want my companies to have, higher current assets and lower current liabilities, right? Because from a key financial ratio perspective, it is healthier to know that in the short term, your company has more assets than it has in liabilities, right? That means if something happens, they can take care of the liabilities relatively smooth, and it won't be too much of a challenge, right? And so because of that alone, from a current asset and current liability perspective, I give it a red flag, not because I don't think Apple can handle it, but fundamentally it's just not safe. It's not a safe slash it's not a safe slash a good metric for me, right? In terms of if I'm going to invest or throw my money into something, I would like to see them show, especially in the short term, a little bit more of a healthier balance in that. No, but again, it doesn't mean I'm giving it a red flag, but it doesn't mean Apple cannot handle this. Like they're fine, right? And we just saw they got $60 billion in cash as well, right? So if you add $60 billion on top of, let's say, all of this right here, it technically is manageable, right? It's relatively manageable. They can handle everything. But I don't like to see the neck and neck like this, So I give it a red flag. Cool. Moving on to another area of the balance sheet, which is we just touched on the short term, assets and liabilities. Now let's look at the long term assets and liabilities, and this is anything beyond 1 year, right? And so let's look at Apple's long term assets. We've seen that long term assets wise, it used to be much higher here, right? It's come down a little bit, not the craziest, but it's come down a decent amount. And another issue, not an issue per se, but over time, the long-term liabilities have gone up, right? Typically, you will kind of see that depending on the nature of the business and how they're really running it. Here, I'm not too excited about his long-term liability going up, but I am excited at the fact that they have a significant amount of long-term assets, and their long-term liabilities is not neck and neck with the long-term assets, right? So here we're looking at about 145 billion in long-term liabilities, and then we have basically 210 billion in long-term assets. So to me, that's a much better ratio that compared to what we just saw with their current assets and current liabilities, right? So to me, this is more of a green flag, and I give it a green flag. It's a little bit more healthier, I would say, in the long run. So that's nice. Now, here's where it gets interesting, right? When you kind of aggregate and sum it all up, total liabilities is sitting around 350 billion, give and take. Total assets is sitting around 350 billion. And then the total liability is sitting just under 300 billion, right? And that's something I'm not particularly the most excited about, because that means it only leaves just the remainder, right? When you subtract let's say 290 billion from 350 billion, you're basically getting about 60 to 63 billion dollars of shareholder equity, which is going to be on the next slide. And to me, that's not good enough. That's not good enough for a company this size and that has this type of ability. I think they can do a much better job in providing more value to shareholders. So if you can recall, in 2023, Apple stock struggled. It struggled quite a bit for quite some time. Right. But so far in 2024, we've seen it making major moves and showing us its AI play, all the features, all the updates, new products and things they got lined up. And they're managing their money better, both on the income statement, right, and the balance sheet. And so it's starting to turn the corner. That's why you see the stock at 219 as opposed to what it was last year, around 130, 140, 150. And it stayed in those ranges for a while, then eventually 180, and it stayed there for a while as well. But this year, we're seeing a lot of good movements. But this is definitely something that, in my opinion, is a red flag. And until they can provide shareholders with more equity, right, by improving these numbers here that we see, is always going to kind of remain a little bit of a red flag. Again, it doesn't mean that they can't handle the leverage debt, the debt that they're leveraging, and how much debt they're using. But typically, I like to see a little bit more of a healthier financial situation. Of course, they run it pretty well, so that's fine, right? But from asset perspective, I'll say overall, the good news is since 2014 to 2023, right, the asset column has grown, which is good. But over the last 3 years, it has not grown that much, right? It's been relatively flattish. Like I said, 2023 was a flat type of year. 2022 was basically the same thing, and so was 2021, right? So we haven't seen that robust growth that we saw, let's say 2015, 16, 17, like that trajectory of it going up like that. We haven't seen that in a few years now. And so we'll be interesting to see where to finish at in 2024. Okay. Now, if we look at their total liabilities, we've seen that increase quite a bit, but they've also worked on trying to get that in check, right? So we've seen that increase consistently over time. Kind of peaked a little bit more in 2022, and then it's come down a little bit. So it's nice. It's always good to see that total liabilities is less than total assets, but the gap and the ratio there is so important, because what that leads to is our shareholder equity, which is on the next slide, like I said, and we're going to look at that in a split second. So for a total asset and a total liability ratio / relationship, I give it a red flag, because I'm not particularly excited about that. All right, and to me, that also leads to a red flag for the statement of shareholder equity, because, like I said earlier, that gives you only about 62, right? in 2023, we see is about $62 billion in shareholder equity. And the reason why I'm not excited about that is because look at what that used to be in the past, right? 2014, 2015, 16, 17, 18, 19, 20 started coming down a little bit. Some of it is naturally understandable given the pandemic and how companies have had to maneuver and navigate that. So that's fine. But I still do think a company like Apple can certainly make better, can improve shareholder equity, right? Because as an investor, this is important to you. You want to see shareholder equity go up. And from what we see here, we've seen it decline since 2018. But the good news is in 2023, right, it kicked back up a little bit. I mean, shareholder equity went down significantly here in 2022. That's sitting about what, 30. This is what, about 30K. I mean, not 30K. I mean, 30 billion, like not 30, like close. No, that's not. Yeah, around 50 billion at that time, right? And so that is not attractive from where it used to be into where it's at that point. But the good news is they have turned a corner, right, and has started to kick up nicely, and that is why we see, right, it went from 63 billion to 50 billion and then back to 62 billion, and Q1 as of 2024, 74 billion. So that's much better, making progress in the right direction, right? And so we want to continue seeing this go up. Now, if I see this go up, let's say 2024 is end of 2024 is up here, and the 2025 is up here, I'm like, okay, cool. Then I can kind of turn this into a green flag because it's shown multi-year consistent growth in shareholder equity. And that is really where the stock price impact or the growth of the stock price comes from. The higher the shareholder equity, the lower the liabilities, and the better the asset, the higher the assets. And if the income is coming in nice, that's when the share price goes out the roof. And that's exactly what we see with NVIDIA. If you haven't already, make sure you check out my NVIDIA stock research video, and I kind of highlight really how these things play out, you know. And so we see that in Apple here. For me, shareholder equity is still red flag until I can see multi-year of growth and increase, and then maybe we can revisit it. Right. And so with all that being said, looking at the company's financial rating, I give it 3 out of 5. And the 3 out of 5 is because Apple has generally always leveraged debt quite a decent amount than some other big companies. And so it's not new. It's not the end of the world. It just may not be the most comfortable thing for many investors, including myself. But we've seen Apple's track record. We've seen how they move, and we've seen them continue to deliver. And so for us in general, it's not really the biggest problem. Full disclosure, I do own Apple shares. I have about 50 something shares in Apple, and I've owned it for a long time. And so I'm comfortable with this, with their financials. I would say I'm comfortable with the risk of their financials and how they're moving. But I would be happier if it was better, right? So that's why I give it 3 out of 5. From an income and profitability perspective, there's really no issue there, in my opinion, because their revenue of 383 billion with a spend of 286 billion led them to having a net income of 97 billion for the year of 2023, right? And that was almost $100 billion in net. And that's, granted, yeah, it's a 4.3% decrease in net income compared to the previous year, right? And a 2.8% revenue decline compared to the previous year. Again, 2023 was a little bit of a tougher year in general for Apple. But if that's what tough years look like, and the decline in sales and net profit is only is less than double digits, that is actually quite sexy, right? It's impressive that, let's say, when things are not going great, things are not going well, they can still almost perform like they've been performing at the high level. So imagine when things are great and things are booming, right? So that's how I look at it.